People of the internet, welcome back to another video. It is I, Don Thomas, back in here with another one. As always, folks, the likes, the comments, the subscribes are all greatly appreciated. Thank you so much for the support on this channel. Without further ado, let's go ahead and dive into today's topic, folks. I have a video pulled up here. The video is entitled, Why Some of America's Banks Are at Risk of Failing. Of course, folks, this has been a topic that I've been speaking on for some time now. In terms of just like our economy, the American dream. Of course, we just been talking about the affordability of groceries and going to school and starting a family, buying homes, things of that nature. So all of these topics kind of tie into each other that I've been speaking on as of late. So I come across this video and it kind of stuck out to me. Of course, I'm sure we all, maybe if you're an adult, you have in a bank account. So I see a title like this and it makes me wonder, why are America's banks at risk of failing, right? Living in some shaky times right now, very uncertain times, people's finances, you're hearing cryptocurrencies and Bitcoins and this, that, and the other. So I've also been hearing stories about the American dollar faltering and losing its value, things of that nature. So let's see if we can get a little bit more insight from this video. Of course, I'll share my thoughts. I encourage you guys to share your thoughts down in the comment section below. Let's get into it.
Citigroup was the poster child for what could go wrong in a financial crisis.
The company collapsed from the height of over $500 in 2006. The collapse of Silicon Valley Bank, Signature Bank, and Credit Suisse were a harsh reminder of how quickly a trusted institution could fail.
There's no doubt in my mind there's going to be more bank failures.
Now the stress is really moving to the community bank category, and those are between 1 and 10 billion in assets.
The policy priorities are not as urgent when we're talking about smaller institutions, and that just reinforces this whole too big to fail idea.
Citigroup is in trouble. After the company's collapse during the 2008 recession, Citi stock has continuously struggled. Shares of the company saw more than a 30% drop over the last 5 years.
The firm has faced many ups and downs over the course of my career here, and it's clear we have challenges that we need to urgently address right now.
Citigroup has had worst-in-class efficiency, returns, and stock market valuation, and that's led to underperformance over almost any time frame.
They haven't been profitable enough. It's a chronic laggard in profitability. It's not that it's teetering on the edge.
Once the largest bank in America, Citigroup is now the third biggest in the U.S., with over $1.7 trillion in consolidated assets. Globally, it is the 11th largest, with just over $2.4 trillion in total assets.
Citigroup, I believe, is finally turning a page. The first step to improve is to recognize that you have a problem in the first place.
We know there is a clear-cut case for change at Citi. I hope you've seen we're acting on it, positioning our firm's long-term future and tackling the issues that have held us back head-on.
The challenge now will be executing and changing that culture to what she wants to be more real-time and more aware, more intense, and more about winning.
So what kind of changes is Citi making? And can it return to its former glory?
Let's pause the video right there real quick. So, of course, this video looks like it's speaking specifically to CitiBank, Citigroup, whatever the case is. The irony of it all is that I actually used to work at CitiBank. I didn't know. I thought they were good. And I assume they'll maybe be speaking about banks in general. Of course, the video is entitled, Why Some of America's Banks Are at Risk of Failing. So it looks like the beginning, of course, of this intro is maybe more so speaking to Citigroup, CitiBank, which is, I think, as they showed, maybe the third largest in America, in our nation. I used to work there as a bank teller. Funnily enough, I have some banking experience under my belt. I worked as a bank teller at several banks. I lost count how many at this point, but Citibank was definitely one of the banks that I worked for as a bank teller for some time. So I know a little some, I guess, in terms of just like, not that much, honestly, to be honest. But I, in terms of just like finances, right? In terms of the ebbs and flows, as they say, of just like banking, ROI, the return on investment. Of course, people usually bring their money into banks. They bring their, their savings, their retirements, things of that nature. And, of course, we're hearing stories about people not seeing as much return on those investments, right? And maybe people, of course, we saw before, I think they showed a clip of that as well, too, of banks that have already failed. What is it, Silicon Valley Bank, or the bank out there in the West Coast? Of course, a few banks, of course, have maybe already closed, which raised alarms for a lot of different people. A lot of people were concerned. It rang the bell of like the Great Depression, of course, things of that nature back then, when people were rushing to banks only to be told that there was no money for them to give. They didn't have access to their money, things of that nature. So very scary, folks. Of course, as I mentioned, this kind of relates to all of us. I like speaking on things that maybe relates to all of us, everyday humans, that's trying to make our way out here in the world and figure things out, right? As I mentioned, we all have bank accounts, and nobody wants to hear that America's banks may be at risk of failing, right? So it makes me kind of wonder, what's necessarily going to happen here. Let's watch a little bit more, see if we could get a little bit more insight in terms of maybe any solutions or preventative measures that either the bank can take or we can take as consumers in terms of seeing that our money is safe and secure, our investments are safe and secure. Let's take a look.
Jane Fraser, the CEO of Citigroup, announced a bold shift in the company's strategy, exiting 13 retail markets outside of the United States. Asia and the EMEA region accounted for more than a third of Citi's net revenue in the year prior.
This global vision that Citi retail banking was an aspirational bank, that it was kind of like the Nike swoosh or the Mercedes star, that it was a branded global good. And every CEO had that vision. And, maybe in the 60s it was true.
Under Jane Fraser, Citi is finally unwinding the failed 50-year experiment of serving consumers all around the world. The old banking adage has played out. Wholesale banking is global, retail banking is local.
In 2022 alone, Citigroup completed sales of its business in 5 countries and added Mexico to the list of countries it's departing.
What's been obvious to analysts for a long time is that Citi had become too unwieldy, too big to manage, and that ultimately a lot of the disparate parts overseas, they didn't really have very many synergies between them. 4 executives I spoke to actually referred to these businesses as melting ice cubes. In other words, that over time, with disinvestment, with perhaps not the greatest management focus from HQ, that ultimately their value was decreasing versus some of the sharper, more motivated, locally owned competitors in many of these overseas markets.
Citi instead announced its plans to divert its resources and focus to double down on wealth management. It's a tactical move that several other major banks have adopted in recent years.
I always like to say banking is all about money, and guess who's got money? Rich people got money. Everybody wants to bank affluent people.
You have a financial advisor usually getting paid on an annual basis of 1 to 2% of the assets under management. And to that very basic model, you could add fees for margin loans or jumbo mortgages and things like that. But the reason why Wall Street and investors tend to love this business is that it gives off an annuity-like stream of earnings. No matter what's going on in the merger markets, what's going on in trading.
It offers high returns. It creates growth opportunities in areas that are in the early stages of wealth generation, like Asia and the Middle East. And it comes with less risk of big mishaps, so the regulatory treatment is better.
But at its core, Citi's new strategy is all about simplifying down their business.
Part of the idea is that if you shrink down the footprint and you're not doing so many things in so many different jurisdictions, that not only will you have better critical mass in the markets that you do choose to serve, you'll also get less capital requirements because you're less complex, you're simpler.
Interesting. So there you heard it, folks. In terms of what Citibank is planning on doing, Citibank in particular is planning on doing in terms of mitigating any further losses of that nature. Of course, they say they want to downsize. Of course, so it looks like they're in other markets internationally, Mexico, this, that, and the other, which I would agree. I think if you maybe condense, right, maybe the outreach or the output in terms of this, the asset management and, the funds acquisition, things of that nature, that would maybe make sense. That maybe allow you to kind of hone in and focus on certain markets that your bank is in, whatever the case is. And then, of course, I know in terms of just like they're speaking about just like asset management and like the loans and the bankers, whatever the case is. So I do know bankers necessarily are looking for high earners, right? They're looking for those large accounts to be able to entice you into retirements and 401ks and Roth IRAs and things of that nature. There's a lot of banking products, of course, that they depend upon in order to keep a bank afloat and see to it that they don't have to see the same verdict of these other banks that had to result in closing and shut it down altogether. So, yeah, that makes a little bit of sense, of course. And again, folks, I'm never going to come off as if I'm some economist that knows the ins and outs to the core of how all of this stuff works. Again, I'm a consumer, you're a consumer, right? I have a bank account, you have a bank account, right? So on a surface level, I try to like at least dissect things from a surface level point, so at least we can all see what the take-home value is. And to be completely honest, what I take away from all of this is the fragility of these institutions, the fragility of our economy, the fragility of, just money in general. Again, as I was speaking before in the earlier part of this video, we were, hearing talks about just like the rise in Bitcoin. And I'm not going to act like as if I'm well-versed in Bitcoin and cryptocurrency, things of that nature. But I have been hearing talks about the American dollar losing its value. People were at one point looking to purchase gold. I remember, Costco was selling gold and people were rushing to Costco to buy gold on a bargain, things of that nature. Again, you look back at our history and you hear about, the Great Depression when people were going, or it was the depression, whatever. People were going to banks and were told that they couldn't withdraw any of their funds because there weren't any funds to give. The economy had crashed and plummeted so much to the point where people were panicking. Some people lost it all, right? So, it makes you kind of think, again, as just a general consumer, it makes you kind of think of like, wow, is history going to repeat itself? Have we seen the worst of these financial institutions crumbling? Maybe, maybe not. To be completely honest, I don't think it's much of a stretch at all to assume the worst. Again, just kind of looking around at the world we're living in current day. With Donald Trump now in office, who knows what effects that has on the stocks and the economy and things of that nature. Some people think he's here to save the day. Some people think that he's here to destroy it. Time will only tell. But again, folks, I think for me personally, and again, I'm just speaking from a basic consumer level. In terms of just like banking, right? People, whether you're an investor, you try to diversify your portfolio and, put a little bit of money here, put a little bit of money there. I think that makes the most sense as well too. But I'm thinking for those larger accounts, those, millionaires, multimillionaires, maybe even billionaires who depend on the health and the security of our economy and these financial institutions to see to it that their money, if anything, is staying the same or somewhat growing, if not losing money, whatever the case is. I don't think anybody wants to be, any banker, even the bankers from a retail standpoint or just a, career standpoint, whatever the case is. I don't think bankers are in the business of losing people's money because, again, how do they get their interest? How do they get their, their ends, I guess, whatever the case is. So, makes you kind of think. Again, man, I feel like in our current world right now, our current economy, especially here in America, man, you kind of just got to take things one day at a time. You can do as much preventative maintenance as possible, but we all could fall victim to not be having access to our funds, right? We all could wake up one morning and find out the bank that we bank with is no longer accessible, and we have to maybe scramble to figure out how to remove our money and where to transfer it, this, that, and the other. So yeah, just food for thought. This is the kind of concept on. I mean, me right now, of course, again, I'm just the average everyday consumer. Assuming you are the average everyday consumer as well too, depending on who's watching this. So just things to keep in mind, folks. Your finances, these institutions that we trust to uphold our hard-earned dollars. All right, cryptocurrencies. Again, if you're versed in that, what the case is, some people will say, hey, well, yeah, the American dollar will crumble, and Bitcoin and cryptocurrency will be the solution to that, right? Some people are pro-cryptocurrency. Again, I'm not as versed. I know I have a little bit of crypto, a little bit. But I do think there are maybe alternatives out there that we all can consider in terms of the safety and the security of our financial well-being. But those are my thoughts, folks. Of course, I want to hear yours down in the comment section below. As always, the likes, the comments, the subscribes are all greatly appreciated. I will catch you on the next one.